All right, then welcome back. Let's get straight into the market picture then. It certainly has been negative on the South African front, unfortunately. Still, yes, the vaccine news, but unfortunately, the rest of the globe doesn't seem to think that it is of a critical importance anymore. We're still waiting for that stimulus deal, the Santa rally perhaps coming to some sort of close, if you want to call it that, at present. If you take a look at the Asian market, that's gone down for the most part today. All red for the Hang Seng, the Shanghai Composite, as well as the Nikkei then out in Japan. So, fortunately, negativity across the board there. Even if you head on over to Europe, it's gone slightly higher, but not really too much to write home about there. The last two at the bottom right-hand part of your screen as well there. The CAC 40 out in France going down, 0.4%. On the all share then, right at the top, the all share index is down 0.5% today, so some negativity. One of the big losers across the day has been the industrials. It was in negative territory as well yesterday, and that follows through from the Asian trading picture. So indeed, the industrials also following through onto that. 0.2% weak as well for platinum miners. Yesterday was a similar picture as well, but that has meant that the resources overall have also sat 0.3% weaker in this afternoon trading as well. Financials are in green territory though, around 0.3% to the good. So the banking stocks doing fairly well, 0.7% higher up over on that front. Onto the commodities board then, some green across the board here, so which means that all of these have gone higher. Brent crude is now sitting firmly above that $50 a barrel mark. It's 0.1% better off. It's at $50.35 a barrel. $1,843 a fine ounce is the price of gold in this afternoon trading picture. It's nearly 1% better off today. $16 gained as a net change for today. Platinum also remaining firmly above that $1,000 a fine ounce mark. It's sitting at 1,017. In fact, it's 1% to the good as well. Let's check in on the currency. Well, we have been sitting in and around that 15 Rand mark, and it's pretty much the same right now, but 14.95. In fact, we're 0.5% better off today. That is a good change. Let's consider, though, that there is perhaps some weakness in the market out in the United States. We did see negativity filter through there. The likes of Pfizer getting a bit of a hit, despite their desire to get in on a 39 billion Rand merger, $1 million merger, should I say, of a company called Elysian Pharmaceuticals out on that side of the world. Also, Walt Disney getting put down, unfortunately. So that has unfortunately meant that the markets out in the US did see some negativity, and that negativity filtering through into even the currencies. 14.95 for a greenback is where we're sitting, so some strength over there, while we're sitting at 19.96 for a British pound. The euro will cost you 18.17. Let's chat now to the director of ZarX, that's Saki Zamxaka, who joins us now via video link as we get an update on this market picture. Saki, thank you so much for the time. Generally speaking, this market does seem to still be headed in a general upward trajectory. Is this still the Santa rally, or is there perhaps a little bit more to that?
I think there's a little bit more Arabile to it. Well, and maybe it's more of a hope for me. I think we've bottomed out, and we can see, I mean, with the data that's been released this week and last week, that things are improving. Well, of course, improving from a very low base.
Yeah.
Because we've seen a lot of declines in certain sectors. But I think no movement at this time, and movement upwards is actually pretty positive.
Yeah. What is your projection here? I mean, tech stocks have been pretty much the bread and butter of the stocks that have gone up this year because of COVID-19, and obviously investors looking at them saying that they provide perhaps a future sense. But then China says, well, we're going to be a little bit stricter when it comes to regulations here. Does this put a dent in how investors will take a look at the tech counters?
I think tech is gonna always be interesting in that. I think a lot of the gains which could be made out of it are probably priced in already. But I think as we go into the future, a lot of people are asking questions about regulations. They're asking questions about ethics. And I think China-US tensions as well have spilled over a little bit into the tech and what it is going to mean. So if you have Huawei, for example, that has largely relied on Android, and they may now be doing their own operating system, what is that going to mean into some of the markets that had a bit of gains in China? So I think while there's movement forward and everybody gets it, that tech is the big thing of the future, there remains also quite very serious uncertainties. So I think it's a safe environment to be in, but it's going to be faced by a lot of questions. I mean, even in the US, there are antitrust discussions that are going on about some of the big tech companies. So I think tech is going to be quite exciting in many ways, that there's a lot of questions that remains a bit unanswered.
Yeah. Speaking of uncertainty, Europe continues to have that. You still have Brexit, which isn't sorted. You have a whole lot more restrictions, of course, due to COVID-19 as well. So things aren't looking too pretty out on that side. European shares remaining pretty flat, I suppose, because of that.
Well, I guess exactly that. As I'm saying, I mean, a movement that's not a movement downwards, even if things remain flat, is pretty good. I think generally it indicates the psyche in the market that people think we've seen the worst that there is. Of course, the talks about vaccines starting to be available are giving people an indication that maybe we've seen the worst of it. So I think we can only hope for a world where there will start to be a movement upwards, well, which is what I think we need the most.
Yeah. Saki, we also then got news out of the South African Central Bank then as well with regards to foreign direct investment, 16.5 billion rand in terms then of the outflow from the FDI. That's 1.1 billion US dollars in the third quarter. It's the first outflow, particularly since 2018. So it does mean that things aren't necessarily looking too good, though. Or is this nothing to really worry about?
Well, I guess, I mean, we are going to have movements going this way and that way. What was interesting for me was part of the explanations given for this net outflow, which was that some of the companies were repaying their debt to their shareholders that are outside. That, again, may seem like a negative thing, but the fact that we still have companies with enough balance sheets to be able to almost save their shareholders when they need the cash is not such a bad indication. But again, I mean, we know our flows have generally been also influenced by hot money. So we hope that that trend is going to change, and maybe people will appreciate that our margins are still fairly decent if you compare us to other emerging markets. I think our bonds, for example, compared to other developing countries, offer better yields for the risk that we offer in South Africa.
Yeah, it's not too bad, though, considering the fact that we did get more downgrades as well this year from the ratings agencies. Yeah. Our bonds aren't looking too bad, are they?
No, they're not. I mean, I think we're doing fairly well. I think, again, those in financial markets will know that South Africa, compared to most developing economies, even those that are bigger than us, like Brazil, we generally have sophisticated financial markets. So in reality, we sort of can be a defensive play compared to other emerging markets for those that are looking for good returns, because I mean we still know that compared to Europe, developing or emerging economies have a better growth potential.
Yeah, 715,000 jobs, that's formal jobs in the coming through, particularly then in the third quarter for that quarterly employment statistic number. That's certainly going to be beneficial, but I guess it's not enough though, right? Nothing ever is at this stage unless it's really in the millions.
Definitely. I mean, again, what we got to remember is that a couple of months ago, Stats SA announced that we had lost more than 2.2 million jobs. So until we get to recovering those 2.2 million jobs, we're still fairly in a negative position. But again, anything going up in the right direction, that's green, that's good news. Having hundreds of thousands of people back in the job market is something that's going to have a very positive impact in the economy. But we would like to see this momentum getting better or increasing at least for consecutive quarters. Then we can have, an economy that's back to pre-COVID performance than an economy that's going back.
Mr. Zamxaka, be safe. Hopefully we'll see you soon. Thank you so much for the time. Really appreciate it here on SABC News. That's Saki Zamxaka, the director then of ZarX, helping us unpack that market movement. Indeed, as we noted then, that is the quarterly employment statistics coming out. 715,000 formal jobs being created then in the third quarter. We'll unpack all of that detail for you right after this.